All the content on this channel is for education or entertainment purposes only. It does not constitute financial advice. Always remember to conduct your own research. So in today's video, we're going to be running through the two new funds that are coming out in Europe before Christmas. The two new funds are from HANetf and YieldMax. Unfortunately, we have data on one of the funds and then we don't have data on another of the fund. So let's have a look. HANetf and YieldMax are bringing ULTY and are also bringing NATI. As we know, ULTY is a US ETF already with quite a lot of data. So we can look at the data, see if it's worth the investment when it comes to Europe or not. And I'll give you my personal thought on ULTY. And then also we have NATI, which is a new ETF, which we are going to dig a little deeper in, but there's only so much we can look at without any data available. So a little breakdown of ULTY to start with. This will be a direct wrapper of the US ULTY ETF, just like they have done with MSTY, for example. So that is a benefit to YieldMax, but I don't think it benefits the European investor in any way, shape or form. And the reason for that is we're not going to get the weekly payments. It'll be monthly distributions due to how Europe is set up. Again, still problems with the weekly distributions, unfortunately. There's just so many setbacks when it comes to Europe and it comes to the income space. For those who's been here since we've been pushing these funds in Europe since the beginning, will know all the problems that we've had to overcome. So ULTY seems to target an 85% annualized yield, which is very high. So it gives you the income so you can choose what to do with that income alone. So that may suit some investors and it will not suit some investors as well. Another troublesome thing, this is not confirmed by YieldMax or HANetf, but generally when it comes in a wrap, which is not a UCITS wrapper, like an ETC, it would have to come with 30% withholding tax, which we have seen with MSTY. And I think this is the biggest letdown of YieldMax coming to Europe. 30% withholding tax is absolutely huge. And I've broke down exactly why it's let down in my eyes. So here we have the 30% withholding tax impacts. So this is US tax on European investors. Whereas if you invest in your ISA or even outside in a normal taxable, you will get 15%, not 30. So this doesn't really make sense to me. So imagine you've got $100 distribution. It's a monthly distribution, for example, like it's going to be. You only keep $70. The US tax takes 30. And this effectively will reduce your yield from 88.89%, which is what it's at with the share price right now, to around about 62%. So you're effectively giving your yield out. And the problem is, I see with this is, if you need that yield to either reinvest back into the fund or to get a total return, then this investment will probably not work in my eyes, because ULTY's total return isn't doing that great. So if you're already giving 30% of your total return away, then you're probably going to be in a bad situation. That is just my personal opinion on the withholding tax situation. Let me know if you agree in the comments. I'd love to know your thoughts. So next up we have NATI, which we don't have much data on at all, guys. So I'm just giving you the information that we've been given so far. Unfortunately, the defense sector has absolutely ran. If you look at NATO, I think it's up, we're talking 70–80%, maybe even more now. Defense have done really well. Defense spending is going to go up over the next 5 years, but you are relying on the defense sector to be doing good after it's already ran. So if you are bullish on defense stocks, this is probably going to be a good fit for your portfolio. So they will be doing cover calls on defense stocks inside this basket. No information so far. I think this will be a UCITS like we've seen with the big tech fund by YieldMax, which targets 24% yield. So if we are going to come with a fund that is similar to that, I think this is going to work great. But if they're going to bring a fund that is maximum income, like ULTY, for example, I don't think this fund's going to work very good if that is the case, but we don't know what's going to happen yet. I've had no confirmation of if it's going to be max income, if it's going to be a target yield, etc. Though I am going on Spaces with YieldMax on Wednesday, so hopefully we can get some more information on this, which will be great. It will be monthly income again and not weekly like we're all hoping, but it's not the be all and end all. It's just not possible in Europe. Though I think it should be available weekly income if you do want it. I think this is something they really need to think about. So let's have a look at the pros and cons so far that we've got. So the pros are, there's a big yield potential in ULTY. It's a monthly income stream. Direct US strategy access. So the pro is it's a liquid asset because you get direct access into the US fund and you're not making a new fund that's not very liquid for Europe, let's say. But when you do that, there is some cons that come with it. The instant con straight away for me would be the 30% withholding tax. You are essentially giving your yield away to tax instantly. And if you need that yield to get a total return, to reinvest back in or just take it as distributions, then you are effectively getting less of a total return by buying this version when you can just buy the US version direct and get 15% withholding tax. So yeah, that is one of the biggest risks I see. Also NAV erosion risk. As we know, ULTY has gone down in share price. And I have actually got some data that I'm going to present to you and show you exactly what's happened with ULTY. It's not a UCITS wrapper either, so that's why we're getting the withholding tax as well. Moving forward, all my portfolio reviews will now be on Patreon. This is where I'm going to share my full breakdown, and you also unlock the full catalogue since the beginning of the portfolio reviews. Inside, I will share high value content for the community and all my spreadsheets such as the net worth tracker, and you will get to see certain strategies that I use such as the 75-25% strategy. So if you want to support the channel, the link is down below and I'll see you inside. In the past, I've had quite a lot of questions asking how I actually keep track of all my payouts, my dividends, and my portfolio snowballing each month. I use Snowball Analytics. It pulls everything into one dashboard so I can instantly see my cash flow strategy is really working. If you want to try this for yourself, I've got 10% off for you. Just use my code CashflowKing below. Links in the description. All right, let's jump back into the portfolio review. So here we have ULTY performance data year-to-date 2025, and the problem I see with this is you are hoping the distributions stay high to get a total return. And if we just look, the year-to-date price action, the start was $9.04. That's January 25. November 25, the current price is $4.61, and we have been in a bullish environment. Yes, we had a dip in April, but the back end of this year has been very bullish. We've had Nvidia's up 60%, Broadcom's up 60%, TSM's up 60%. These are just some names off the top of my head. We've had stocks up massively this year. Year-to-date total return for ULTY so far is 5.84%, while it's paying 85% yield. So for me, something isn't right. Something isn't right with this fund. How can it just return 5% while it's paying out 85%? So that total return includes dividends plus price appreciation or depreciation. And the problem with that comes with when your share price goes down, so will your distributions from that ETF, because the distributions are dependent on the share price of the ETF. So for example, we had a 10 cents weekly payment distribution from ULTY in January 25. November 25, we have 6 cents. That's minus 40% decline on the payments because the share price has gone down. And the current yields, based on the current price, is 88.89%. So with that data, you will use it as you want, but when I was an investor in ULTY, I couldn't make it work. And that's without the 30% withholding tax took off. I was just getting 15. So you will have to take this data and use it as you will, but when I look at this data, I don't think it looks very good when you look at the performance of ULTY this year, while stocks have gone up 60, 50%. The S&P has gone up over 20%, for example. So what I really worry about with ULTY is what would happen in a bear market with ULTY. If the markets went down 10-20%, it's not going to look pretty at all. So I've got a couple of questions for you. YieldMax and HANetf have brought these new funds out in Europe. Do you think they've brought the right funds out? Because I think ULTY shouldn't have been one that they brought. I think they should have brought something like CHPY, GPTY, semiconductor funds that are doing absolutely amazing 50% total returns this year. These are the kind of funds that they should have been bringing. Instead, because usually what happens is investors chase yield. For example, if you look at ULTY, the A was around 4 billion, and that was before a lot of people have left the fund over the last couple of weeks. And if you look at SOXY, the A is around 10 million. And the difference in total return is just massive between them two funds. So that bit of data there just shows that investors chase yield and don't chase actual price appreciation and total returns. I think this is why YieldMax have brought ULTY to Europe. So I think NATI may do well. I think ULTY probably won't. But I'd like to know your opinion. Would you invest in NATI or ULTY? Do you think it's worth the risk getting that high payouts, or will you need to wait for more data? Me personally, I'm going to wait for more data. I won't be making an investment in ULTY, but NATI, I'm definitely going to be watching the data, presenting the data. So you let me know what you think in the comments, guys. And just in case you missed it, right in front of you will be a video on compound interest. Give it a watch if it's something you're interested in. Thank you, guys. See you in the next one.